Today is Friday, January 6th, and it's been an interesting session so far due to the 8:30 a.m. non-farms print. Now, the purpose of this video is to talk about this data point and how the SpotGamma data can help you structure some interesting trades. Today brought up a particularly unique opportunity that we wanted to highlight. Our top question that we get at SpotGamma every day is, look, your notes are great, your morning notes are great, but I don't quite understand always how to translate this into ways to inform my trading. So we wanted to cover an example of that here. Now, as you can see, obviously the futures market jumped after that non-farms print, about 50 handles right into what would be the 38.50 cash equivalent. And so if we flip over to the SPX prices here, you can see that, in fact, yes, 38.50. Move my picture here, 38.55 to 38.60 is the area that we're hitting resistance so far on today's session. Now, if we look at our morning note, this is the note we sent out at 7:30. We talked about the market volatility being around this 8:30 a.m. non-farms data release, and that would likely release a lot of movement that would be somewhat contained or muted right after that initial move. And the reason is because on next Tuesday, the 12th, is the CPI print. So like a kind of a dog chasing a ball, everyone cared about today's non-farms print. The print comes out, and then immediately we're all going to go, well, what about CPI next Tuesday? And so that would mute reaction over a slightly longer term. And so today we were very clear, and we highlighted, again, this is at 7:30 this morning when we sent this note out, that today 38.50 to 38.60 resistance is resistance for today. And if you zoom out just a little bit, the bigger resistance line is at 3,900. And we wrote down here that we'd likely take a couple of sessions to grind up into that 3,900 level if we have a bullish tilt to today's data reading. Now, on this map, we call it, of the trading flow or movement for today, you can see that very clearly we mark resistance at 38.50, 38.55 up to 3,900. There's this neutral zone from 3,800 to 38.50, and then down below 3,800 is a high risk area. Now, the key insight for today, given the fact that the futures popped higher and the market popped higher, is this resistance pocket, not only for today, but also into Monday. And just to be clear, this is not some kind of thing that we're sort of saying after the fact. If you look at Twitter, we put it out right before that data release that, hey, look, these are the two key levels that you want to watch for today. So you say, okay, great, Brent, you're at this resistance line, but how do we take advantage of this information to inform some trades? So what I wanted to do is just bring up Thinkorswim here quickly, and we could just look at the way that some of these things are trading for today. Now, what's interesting is, again, we talked about the fact that, look, because of the CPI on the 12th, is likely that we're not going to get this big breakout session. That's what we said in that tweet. That's what we said in our morning note. We're not going to get a big breakout in movement today into Monday because people are now so queued on that CPI report. And obviously today's Friday, so we have 2 days of possible decay coming up, right? That is Saturday, tomorrow, and Sunday into Monday. And so the trade that we like and that we could see setting up are all of these call positions that are up over 3,900. So many of you, and we're just starting with a very basic, simple spread. There are tons of ways to optimize your execution or trade in different ways, but this is a trade that we think everyone would understand. And you just look at the pricing of all of these calls above, and they're fairly juicy right now, right? Because the market was up today. Call prices have been lifted as a result a little bit, but we're going to catch 2 days of decay, and we're likely to sort of, in our view, hold under this 3,900 level as a result of the fact that everyone's going to be watching the CPI, and then also that big open interest is at 3,900. It's been a big resistance level. In fact, it's our SPY call wall at 390. And so when we look at all these positions trading up over 3,900, you could structure a whole bunch of different call positions to sell calls to take advantage of the perceived decay that we're going to get into Monday. Because again, we don't think the market's going to continue to ratchet up through 3,900. Now, we're not going to get into sort of the best way to optimize this execution. The point here is the same, that that you could look at selling some call spreads above 3,900. I think the downside is also probably fairly muted under 3,800 as a result of today's data print. So maybe you want to turn this into a strangle. You could position possibly some straddle trades, right? That would say, like, I'm going to profit as long as we don't move up through 3,900. But again, rather than kind of get into the weeds of the best way to optimize, you say, look, we could just sell some call spreads here to take advantage of the fact that we don't think that the market's going to move up over 3,900, and then we could collect some decay. And again, we would put this structured on Monday because Tuesday you have this big data print. If you send or if you put on a trade that is going to that is expressed for after the 12th, you're not going to get the same decay. Decay for any option that exists after Tuesday, the decay is going to be limited because implied volatility is so high for that data, right? So that's why we really want to focus on Mondays to, again, collect some of the weekend decay, and base off of this idea that we don't think that the market is going to punch much higher here because we have this one-day resistance line at 3850 to 3860, and then also the more serious resistance line for Monday of 3900. So we hope that this video is helpful just to give you a general idea of how you can use the data in this founder's note to help inform some of your trade ideas. If you want to try this information out for yourself, hit subscribe now. Right here, you get a free 7-day trial where we send out every day a morning note that outlines exactly how we see market action and market movement. If you do have any questions or comments, please use the comment section below, and we are happy to help you out. And lastly, if you could please give us a like and hit subscribe, it would greatly help out the growth of this channel. Thanks.